Pay attention, because I have found a trading strategy that operates on 3 Forex pairs, is profitable on all 3 Forex pairs. And not only that, but it is also profitable across different time frames within each pair, using only one indicator. Yes, what you have heard, it's as simple as using an indicator with a behavior, nothing more, so that later they say trading is complicated. So the first thing you should do is follow my channel, because this will help more and more traders like you to see this video and demonstrate to the world that trading and algorithmic trading, which is what I focus on, is simpler than people think. Subscribe and let's start the video. The first thing I'm going to teach you is the indicator which is based on that strategy. It is the indicator pivot points. I am going to briefly explain what this is, and you should know that at the end of the video I will deliver this strategy to you. You will discover it and I will teach you how to apply it wherever you want. Here on the screen I have TradingView, where I have added the pivot indicator pivot points. This is an inherent indicator within any free TradingView platform. Well, what pivot points do is that they show us some levels here, as we can see, in any financial asset. I currently have a 1-hour time frame on the euro dollar, but these orange levels are calculated daily. At a minimum, the pivot points are calculated daily. What does that mean? They mark support lines below and resistance lines above. Good. And they mark an intermediate line. What is the intermediate line? Well, here I can see that it is the P. I can see that here it shows a P and the price of the line. Why? The P. Because right now I am on August 1st on this day, and the day starts right here. Good. Right at the maximum. Well, it actually calculates. The one from this candle. Good. It's basically the opening of the day. The day opens here, and undoubtedly, as a matter of fact, this is the reference level from which the price starts. Therefore, here we find the first level down, which is the first support. Second line down, second support, third line, third support, and here we can see it, S1, S2, S3, and so on. If I go up, we will find resistance 1, resistance 2, resistance 3, etc., such as I have this here above from searching on Google. How are these levels calculated? Well, I have an article from Nodo's TradingView Cloud that says the pivot point base, the base is this one here, it is the P. S1 is calculated as P multiplied by 2 minus H, which is the high. All of this is based on daily time frames, meaning the data of the day. P multiplied by 2 gives the first resistance minus the low. As you can see, we are adding distances of highs and distances of lows. I am not going to go into exactly how it is calculated. Each person can look up pivot points calculations on Google, and this is how these levels are being calculated. The point is that it shows us on the screen, on the chart, different levels of resistance and different levels of support. Therefore, we will do something with this information. Now let's get to what I like the most, which is the money. Well, in this case, it's a backtesting. We can see that this simple strategy for the pound and yen on the 1-hour time frame is this. You will see it later. Look here at this journey. What a beauty. From the year 2003 to the year 2024. How incredible and how simple this strategy is. Let's see it and let's try it on other assets and in other time frames. Good. Puring present 30%. Watch out, because it will look for ratios of 1 to 3. You will see it now. It will look for ratios of 3 to 1. Return from where 9. It's very good. Puring factor of 1.43. Statistics from 5 on 40 trades. A very good statistic for making sound decisions. Well, other reports here. When the average winning trade is 1500, the average losing trade is 462, etc., etc. If you want to replicate this, I am going to replicate it. What I want to teach you is the following. Before teaching you what the strategy is, which is the exit management, I will explain it to you in detail. I want to show you how, if I have the pound yen on a 1-hour chart, I can switch it to a 4-hour chart right now to see what happens. I give you a complete backtest and voila. Here it is. Here it is. It's just as profitable as in 1 hour. It's spectacular. Wait, that's not all. I'm going to set it to 1 day. Let's see. There is also, guys. Wait. This isn't over yet. Wait for me. I'm going to try to add a little more scalping. I'm going to put it on, well, not really scalping because it's more swing. M30. It's true that there have been many years without it, but from 2013 to 2024, honestly, it's a lot to ask for the backtesting we've seen in H1, H4, and D1 to be applicable in all time frames, right? It's true that things are very tough here. The parameters could be adjusted a little bit, which you'll see, but what we get is spectacular. In other words, this is a spectacular test of robustness, right? I am going to try it now on other pairs, such as the dollar. Here we have it, and I am going to set it to 1 now, which is the same as the base time frame in which I created this strategy. Now I am going to test the asset euro-dollar. Well, I have it here. I'm going to test it on H1, which is the original time frame of this strategy. And it will have a backtesting, and well. Watch out, because later this can be adjusted with one more rule. The parameters can be better configured depending on the asset we are trading. But seriously, watch out. Try it now daily, for another daily period. Let's see what we get out of this. Well, something similar, fewer trades, but it is clearly, there is an advantage in this strategy. And now, I'm quickly going to test it on another pair. Well, the other pair is actually gold. All right, I have gold here. I'm going to test it right now. Just so you know, this strategy is based on data from the pound yen and is working on other pairs. I'm going to set the split to 3. No, it's 2, the split on gold. All right, I'm going to provide full backtesting. What do you think about this? I mean, what do you say? Honestly, it makes me want to put this strategy directly into a real account. No kidding, straight into real. It's just outrageous. Let's see what other time frames I can use. I think I could really push it on gold. It's just crazy. Am I going to set it for 4 hours? It's just that, well, I'm amazed while I'm making this video. I'm going to switch to another time frame, daily for example. Let's see. How is it possible? I really haven't seen any strategy as versatile as this one here. It's just amazing. I'm going to set it to M30. Let's see what M30 shows us. It's already going down a bit there, making it a bit tricky. What do we have? Good, very good. Honestly, there is a drop here. We should mitigate this somehow. It's just crazy. And to finish, I'm going to switch to M15 and explain the strategy to see what we get from M15. Well, it's true that there are many drops. I wouldn't put this in, but guys, this strategy ends up being profitable. It's very complicated, I promise you. This strategy is more profitable than 99% of what is out there on the internet. Now, I want you to be very well prepared, because what you are going to hear now is something that you can't conceive, or the vast majority of people won't understand. Why is Ramon giving away a strategy that works so well across different time frames and different assets, and although I haven't tried them all, completely for free on YouTube? Here, where there are people who pay $5,000 for strategies that are not even half as profitable as this one. That's why people won't understand, because you'll see that the rules are very simple. I'll explain it to you now. It's nothing more, nothing less than an entry rule, and we are going to analyze it well. The closing of the candle at any time frame. Initially it was 1 hour when the 1 hour candle closes, and this close is above the pivot point R2, clearly R2. Starting from 0.35, take 0.35 as the start of the day instead of 0.0. Right. But well, it's almost essentially the same. R2. This is when the price, that is in essence at some point during the day, if it had risen up to this point and closes a candle above this level, we confidently enter a buy position. In other words, we enter from a higher position. When the day begins, the price shoots up dramatically. Let us observe this now as we proceed. Here are some examples of when to enter, explain the exit. I'll put gold back on a time frame I liked. Note the strategy was not meant for gold. Let's take a look at the list of trades. Here we can see when he entered. This one made $1,800. Let's look for one that took fewer days. This one, for example. Let's see. If we can look at the entry, these are the pivot points. It is here. This is 1 day. This here is 1 day. This that goes up is another day, second day. This that goes up is another day. Okay, these are the different levels within each day. Even though it may not be visually clear, that's how it is. Well, here is a purchase. Let's see, there are two purchases here. Okay, the buy is this one here. We see that point P is this one here. The one, line 2, it just closes this one here, closes above line 2, enters into a buy. In theory, it sets a stop loss at the minimum of the last 6 candles, which is likely here at this minimum. And this is multiplied by 3. It aims for ratios of 1 to 3. 3 to 1, okay, good. This would be 1, 2. And 3, it more or less fits at the closing moment. And it's that simple. Where do I have the exit defined? Here. Profit target and stop loss. Stop loss, price, level. The minimum of the 6 candles, lowest of the 6 candles, okay? The minimum close of the last 6 candles, not the minimum of the minimums, but the minimum of the last 6 closes. Pay attention to this. And then I simply just put a mathematical formula here to multiply by 3 what we risk by the stop loss. Basically, we add 3 times the stop loss to the entry price, which is the close. Nothing more. I created this strategy without knowing anything about programming or having any idea about profitable strategies. I have used this tool to develop strategies that are profitable and robust through different tests that I haven't explained to you today. I explain it in other places, but not today. I simply encourage you to see that the reality is that trading is simple and that being an algorithmic trader is easier than you think. I leave you the description of this video. A completely free 5-class training for you to sign up right now. I'll leave it here in the first comment. And make the most of it because this is really easier to grasp than you think. What they sell you out there on the internet is most likely not to work, let alone as well as what you have seen in this video of just over 10 minutes. So if you liked it, if you found this to be high value knowledge, leave a strong like and share it with your colleagues. Leave any comments about what type of videos you like, whether you want me to explain strategies I find, share more theory, or talk about my own experiences, whatever you want. Leave it in the comments. I read and respond to you. A big hug and have a good week, trader. Bye.